Hey, this is BTRADES coming to you with another trade review for Tuesday, February 10th, 2026. We had kind of a choppy, consolidating kind of day. We have a lot of big news coming up later on this week with some unemployment, and CPI on Friday is going to be the big one. So it made sense that the market would kind of consolidate today to kind of build up liquidity for this big move, which we might have later on in the week. So one thing I like to think about when the market is kind of presenting this type of price action is that this is good information for a trade that I can take in the future. Because the longer that price consolidates, the bigger the eventual move is going to be. Try to think about it as a spring coiling up and building pressure, building pressure. And when that pressure gets too much, it's going to pop. And based upon how long you squeezed it, that's how big it's going to pop. All right, let's jump into the pre-market analysis and then the charts, and we're going to see what happened today. So you can see we had some 8:30 red folder news, which didn't really create much of a reaction from price, and we were pretty much opening also right around the close from yesterday at 69.80. And we were above the cloud that was trending up. So as long as the cloud held as support, I consider that to be a bullish scenario where we only be looking for longs. I still did wait until 10 a.m. to take my first trade, as I like to see that manipulation leg play out, which typically happens in the first 30 minutes. And then yesterday's value area was we were opening in the middle of it, and it was from 69.70 to 7,000, and that was a very clear target for me that we could traverse that area. And then I also had mentioned that if we get down to 69.70, we would still be right around the top of the cloud, so that could still maintain bullish structure that could deliver us to buy side targets above at 7012, which was the value area from previous Monday, and ATH at 7030, and also the upper Bollinger Band at 7055, which I do think will be targets that we hit later on this week. We didn't get it today. As I said earlier, we had kind of a consolidating day, and then we actually kind of shifted to kind of a bearish tone towards the end of the day, but pre-market has already come back into bullish territory. So let's jump into the charts now and see the trades that we took. So we opened here at this candle, which was a slight gap up, which we filled almost immediately. And then we had this bullish tri-star pattern here with these three wicks that pushed us up in this 955 candle. And we left behind this big inefficiency, which I was looking to take a trade out of. When we retraced into here, um, I was considering that this might deliver us all the way up to the next level, which was at about 7012, which also represented the value area high from the previous Monday, a little bit over a week ago, I think February 2nd. So then I got in a good fill, and we came up here to 7,000, which was also the value area high from yesterday. And then we kind of chopped, and then I noticed that we were getting all these wicks. So I cut this trade at just over 7,000, which did represent a 2.75 to 1. Not my typical risk to reward ratio, but I was reading price, and typically I do say that when I enter, I either want it to hit my stop or my target. But in this case, I would have been looking at a loss. So this was a good decision here, just reading the price action and how it just seemed like buyers were getting absorbed. And there was actually some big bids that came in from aggressive market buyers that could not push through. So it was obvious to me that there was a large passive seller sitting here above 7,000 that also had rejected price yesterday. So then I took like kind of another scalp right here, a very small one, and that was it for me today. This was just like a one-to-one, just grabbing a few points. And later on in the day, I did want to highlight that when we were in this consolidation area, I was also watching bar chart on their gamma exposure. And in the morning, if you saw in the pre-market analysis, I said that the options market was giving us bullish pressure because the overall gamma exposure for contracts expiring today, Tuesday, February 10th, was about 1 billion positive gamma exposure. But as the day went on, we had shifted, and then when we got to around here, we were actually about negative 600 million negative gamma exposure, and we had just broken the gamma flip point. So price does behave differently, and volatility increases when dealers are uh, have negative gamma exposure, and as price falls, they actually will sell to hedge their long positions. So actually, you get increased volatility when we're below or in a negative gamma environment versus kind of more of a steady buying pattern when we're in a positive gamma environment. So you can kind of see that there was definitely an increase in volatility here towards the end of the day. And in my Discord, I had noted around this area, right around 3 o'clock, that gamma had shifted to negative, and that also the maximum gamma exposure or max gex strike was 691, which was about 69.50 on ES, which is down here. We didn't get all the way to it, but we did approach it. I think the low of day today was 69.57. So this was actually, I mean, it's a little bit risky, but if you're going to take a trade and risk a small percentage of your profits, I think the risk to reward presented in this setup was really great to catch this. This was actually 18 points on this drop. Just taking the gamma exposure into context and understanding that. And I can show you that post right here where I said overall game exposure negative now with the biggest striker Max Gex sitting below at 690. And it was also had the confluence of being the SPY 20-day SMA or the monthly average. And SPY is the leading indicator for or leading asset for ES. So I tend to watch the daily and monthly, weekly moving averages from SPY and then try to convert those to equivalent levels on ES. And I often post that in my pre-market analysis. But you can see this picture showing that we were approaching the gamma flip point, and then you can see that 690 is the biggest exposure here. So about 700 million in negative gamma exposure at the 690 strike. And then this chart is showing you contracts expiring today, February 10th, was negative 600 million. But in the morning at market open, we were actually about 1 billion in positive gamma exposure. So as the day goes on and the gamma changes and theta changes and volatility changes, the gamma overall gamma exposure will change as well. So bar chart is a really great free resource that will update in real time every time you refresh the screen. So that's what I use, and that can be used to inform trades later on, like throughout the day. Especially in the morning, I found a lot of confluence between overall gamma exposure and whether we have a green day or a red day. When you do see that we've reached a gamma flip point, the increase in volatility, like it makes a lot of sense when you can kind of align the chart with where you know the gamma flip point is. So that's something I would recommend people looking into. Definitely barchart.com, SPY gamma exposure. And today is not what I would call an unsuccessful day because my measure of success is not based upon P&L, even though it was a green day. It was a relatively smaller green day for me, but I executed well and I stayed out of bad trades. And I really believe that the pathway to consistency, as I always say, is avoiding the bad trades and just being very selective and actually even logging on and looking for reasons not to trade. Because if this is something you plan to do the rest of your life, you want to treat this as a business and be very serious. So you don't want to put your capital at risk unless you have all the confluences that you look for your setup. So that's a big part of trading, I think, is just patience and being able to sit back and do nothing because you get paid for waiting in this game. And also, I wanted to let you know that I'm going to start posting like when I have insights into like a gamma flip potentially happening or gamma shifting from one strike to another late in the day. I'm going to start posting those on Twitter in real time. So maybe in the afternoon, 1 o'clock, 2:30. These are kind of times when I've noticed maybe a change in the state of delivery. And these are going to be actionable insights that you can actually trade. So if you want to, go ahead and give me a follow over on X at BTRADES and look out for those calls coming out. For mentorship, feel free to check out the bio.site /BTRADES, and I'll see you guys tomorrow. Have a good one.